Yeah, I'm losing my edge.
I wanted to take this break in metals action today to talk about gold and silver products. Gold and silver trading like crazy recently. Gold got as high as $2,000, highest prices that we've seen in gold since futures started trading on that product almost half a century ago in the 70s.
Think about that.
Silver, yeah, I mean, half a century, Pete. I don't even think you're that. You might be. All right, let's not age you. But anyways, silver, not
That's
seeing
sitting
those
right around your IQ, isn't it?
not seeing
Around that 50,
not seeing
54.
Not seeing the same price levels as gold, as silver is only half of where it's been in the last half a century, but seeing as much, actually even more price action as gold, because this market has seen 7, 8, 9, 10% days in recent trade. While gold, while it's seeing these unique price levels, Pete, only really seeing 1%, half a percentage point on those days where you're seeing big silver rallies. So two different trades within the metals, the precious metals universe, which is cause for looking at a lot of different products. And at the small exchange, we have a singular metals product that actually baskets both of these in together with platinum, which actually is not really the most interesting piece. And it's actually the smallest weighting of the precious metals index. So we'll leave that just completely out of mind for today's show. But you'll see some of the merits of the small exchange product and some of the merits of these other products as well. But a little bit, look into their pitfalls, which is nice and easy for us to look at other products' pitfalls and then talk about our advantages, because we were able to create this product just a couple months ago, which is a huge advantage. And now, as everyone and their mother wants to trade metals, we thankfully have what I think is the most relevant product in terms of size, in terms of its structure, and just in terms of getting people to trading metals as easily and cost effectively as possible.
Yeah, it's, you know what? You mentioned the cost part, and it's a very manageable piece. You know, there's no extra leverage here. The leverage is the same leverage you experience throughout the futures world. There's no reduction of leverage. It is what it is. But what you've done is, with the smaller notional, created a smaller move, and that creates smaller buying power. All those things, important things to expressing opinion, managing ideas around comfort levels. And this is, you know, you bring up a good point. Let's throw out the platinum. Why? And then the question is, well, why these guys even include the platinum? Platinum is a high volatility metal. So when options on futures come, this becomes an interesting vol trade because of those components. So there is some method to our madness, guys. And in the zeal to make these simple and unique, there's a reason behind thinking about these products now and moving forward.
And sometimes platinum, like, this is what's nice about the metals, the precious metals universe, is sometimes gold and silver will be, you know, having a pretty normal trade, nothing crazy going on. And platinum, for different reasons that are specific to that metal, will be moving like mad. And so it just so happens that platinum is actually the least volatile piece of the bunch in recent trade. But yeah, let's focus on those more volatile pieces. There's good reason to be looking into precious metals trades if you are, you know, used to stocks. We're seeing a lot of people, a lot of converts from stock trading primarily. A lot of people who, you know, maybe had just a Robinhood account needing to open other accounts to look at metals futures, because metals are moving like mad. And when you go to metals ETFs, which we'll talk about in a second, there's a lot of those pitfalls. So just a summary here of the movement that is being seen currently throughout precious metals. You see this gold, a very just calculated rise to what's almost a 30% year in gold, and which is the highest prices in gold in the last 50 years. Silver, different story, not the most expensive prices in silver, but as you can see, right in middle of July here, just skyrocketing, a 30-40% move higher in a matter of a couple of weeks, whereas gold moving to those new highs, but only a rally of about 10%. So that's where you get that relationship of one, unique price levels, the other unique price action. And Pete, when you go to, we'll get to ETFs in a second. When you go to futures, though, because you want that pure exposure, you want to get right to silver, right? And you want something that is that is cost effective with your capital. And like you said, it's not like /SI has different leverage than /SPRE, the small precious metals. But when you're talking about having to only pay 5 to 10% of the product size to trade it, an SPRE, Pete, that's only equating to about $300. And /SI, that's equating to about $10,000 because this product's very large. And you just look at these moves. I mean, this is a huge notional move.
And I like I remember mid part of last year, you and I always looking at the relationships and building, gold is a $150,000 notional, silver's around $85,000. How do I weight that? And we'd always talk about, do we IV adjust it? Do we notionally adjust it? Here's a case of, that's a $35,000 plus move in the underlying. We did a great segment yesterday about our futures expensive and our market's expensive. And it's really interesting the ability for these notionals to move so quickly and so fast past the comfort point. So I like, it's great to throw up a chart and look at the relatively quick move from 20 to $26.50. Looking at it in these terms reinforces the stark reality of what you're dealing with when you're dealing with institutionally sized futures.
Yeah, it's going to cost you almost 10 grand to trade this /SI product. And in the last 2 weeks alone, it's moved almost 30 grand. I don't know how many people can trade that, how many people like you and me, or even you, especially Pete, having many more years of experience. And I mean, not to call you rich or me poor, but more money to trade. That's no matter who you are on the individual investor or retail trader side, that's too much. And then, they made these futures, and once again, it's easy to point to the pitfalls of products that are even just a few years old, because we made the most recent metals product that you have available to trade. Even these new futures that are made for smaller traders, /SIL, a fifth the size of /SI, Pete, that's still going to cost you almost $2,000 to trade in the capital that you put up. And this is still a market that's moved $6,000 in the last 2 weeks. Once again, I don't know anyone with my age and account status or yours that can still withstand moves like this. I mean, you and I, Pete, were looking at short calls in /SI, and we're really looking forward to when options come on board with /SPRE, because it'll be even easier, even more tools at our disposal. But the only calls that we could look at in this big silver futures, the traditional silver futures product, Pete, was really far away. And just so we didn't have to put up that much capital, and we didn't run the risk of getting that full contract, which is not as much risk. We could only trade I think it was a 3 delta call, which is only equivalent to about 3% of the /SI contract. So whether it's the big one or the one that's 1/5 the size, still really just too much exposure for the everyday trader.
Absolutely. It's a lot of contract it's a lot of notional for a lot of us to consume. And we've talked about this, and we'll keep reinforcing it. The idea that, the asset class is interesting. We talked about the interest of where gold and silver has moved recently, and precious metals in general. The size tends to be the most destructive part we add, because we don't have choices on size. So we've got to fit this disproportionate product, because we love the idea around the interest of the trade, the uniqueness of it, the independence of it right now, and the amount of back and forth in it. So really what we've been able to do, and you're right, starting from scratch, we're able to build something that fits in so many different ways. And I think that is really powerful. Again, the silver ETF, unlike USO, which is, again, such a broken barometer of crude oil, so tough to deal with that. Silver and gold are physically backed, and they hold whatever it is. They track the underlying better, but the costs involved in using these. Now you're going back to, okay, I can get smaller, but what I'm foregoing in terms of opportunity elsewhere to gain exposure here is a real challenge, and it's a trade-off you need to weigh.
Yeah, it's almost it's like big and expensive in a different way because you look at that chart, it's a $23 ETF, and it's fully customizable in that I can buy one share and it's going to cost me $22 or $23, or depending on your brokerage, half of that. The only problem is, like I said, it's expensive in a different way. Because if you buy one share, Pete, it's quite literally moving by about 40 cents per day. And while I was just bemoaning the fact that, I don't have a huge account and I'm not the biggest trader, if I was looking at something that was moving 40 cents per day, thank you. I don't really know what I'm looking at 40 cents a day, right, Pete? And here's the thing. The margin for each of those 40 cents is $11.50 or the full $23 at a lot of brokerages. And what that means, Pete, is to get to a point where this SLV shares are moving as much as the small exchange precious metals product / SPRE, even getting it to $90 or even $50, Pete, you're going to need to pay thousands of dollars in margin. Right. And so that's where that costly part comes in is, I want something. Okay, I look to futures, that's moving thousands of dollars per day, and they're demanding thousands of dollars for that movement. Okay, I want something more customizable. Maybe moves between $50 and $100 per day. You look at the shares of SLV, Pete, to get $50 or $100 per day in movement in my account for my ideas in SLV and GLD as well, it's going to cost me thousands of dollars to hold that. And so now it's expensive in a different way whereby, it's not as leveraged. It's not as maybe risky, for lack of a better term, but it's demanding a ton of capital for me to get those returns. And it makes return on capital, large returns on capital, nearly impossible to get with these ETFs.
Yeah, absolutely. And that's that is the struggle of the ETF success came from, okay, now I have I don't have to go out and physically buy gold and silver, which is a very expensive, difficult proposition. And when I say expensive, you can go out and buy gold coins, 1 ounce coins, and the difference between the bid and offer is $30. I don't know anyone who can consistently make money when I've got to lift an offer and be right for $30 before I can break even. So the advent of the ETF solved that problem. It provided you a liquid underlying you could trade. The evolution was that came with a cost. Now the next evolution is, how do we gain that exposure? Being more capitally efficient, using our capital in the technology innovates. And you were talking about the new innovations that Apple is trying to put products in your pocket. Financial instruments innovate. They have to, otherwise the industry dies. This is the next evolution of efficiency.
Yeah, absolutely. And it doesn't become this process of, I don't know why this is here. It doesn't become this process of, only using this next innovation. I know plenty of people who still use the iPod Classic. And so it's a matter of, okay, I can get this efficiency and a size that's maybe worth my while, efficiency and a nice return here in a product that's designed for me. But you can also, you and I have looked at recently short SPRE with a short put in SLV, and those short puts in SLV only going to cost you $200 or $300, along with this trade only costing you $200 or $300. So that's a nice complement in there as well. Or we looked at spreads in the options on those big futures contracts, getting those smaller and while still being cost effective. So a lot of stuff to do. Would you, if you're looking at a short precious metals trade here, Pete, are you rather selling puts in GLD or SLV?
It's a tough question right now. I like the short here, and I guess if you're compelled to put a trade together at the same time, I would say the short puts in silver. I know silver's run 12%, gold's run 2%. I just think that if this is something you're looking at strategically, you've gotten a little bit of breath, and silver directionally. I would think you're going to get a better bang for your buck in terms of the amount of premium collected. And I think that would be the trade I would want to make right now.
Yeah. All right. Well,
Where
that's
can we
the
learn more
product
about
guide.
this, my friend?
That's the product guide for gold and silver. You can learn more on the Small Exchange website.